Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the charts behind me. And so this is pre-market prep for Tuesday, March 11th. And yeah, I have to say that I'm probably going to be starting these around 8:15 in the morning just because it's a little tough for me to get them started at 8. But anyways, going to go through the usual tickers that I do, but I'm also going to be including Chewy. Did get an alert on this yesterday, so wanted to follow up on that. And I did cover KOLD, which is, inverse natural gas. Covered that a few weeks ago. And I think that we may actually be seeing a top with that. So wanted to go over that in the natural gas chart. But first, as always, I'm going to be going over the UVIX, which is the 2x long VIX futures ETF, which closed yesterday at a massive price of $47.26, being up 21.21% on the day, pulling back a little less than 1% in the pre-market. And so, yeah, I just wanted to follow up on this. I clearly have been wrong about, this going way past 40. I had taken some profits in a very small, I think just a few share position that I had. I did not expect this to be going on, but it does seem like Trump is effectively kind of forcing a recession so he gets the rate cuts that he wants. I believe that is, what people have been talking about. It does make sense. And so, we might see this continue to go higher because, I just keep having to extend this green box over. But let's just do that so we are being consistent. Or not necessarily consistent, but we are, tracking where that top is. And so I'm just going to drag this green box over and then adjust the high over here to be 48.89, which was the high from yesterday, March 10th. Now I'm just going to adjust this red box over here as well. So I got that matching up. So 48.89. And yeah, so this has been a pretty massive move to the upside. I had talked about buying the dip around, 20, I said 27, 26, thinking it might get down to 25. That did not happen. But from the low over here, it's gone up almost 90% to the high. So pretty massive there. Always, it seems like in this kind of market, a good thing to be hedging with the UVIX, but it doesn't always go up this high. The last time we had this little green box over here, which again is just kind of arbitrary, that went up 30%. So don't always expect this. And, taking a step back, we saw this over here on August 5th. We have yet to see something like that again. Maybe we're getting into that territory as we did have our first close above this light blue downtrending parallel channel, which let's see, where are those pivot points? We got two right there. The high here and the low here. And let's see, where's the other pivot point? It looks like you can see those three pivot points. So that's how I have that parallel channel. And so I guess maybe it is a little bit arbitrary to say this is the first close above that. And we actually did see a close over here, and that marked the top. And that was a pretty strong close too. That was on, October 31st. We had this nice big green candle going up on that day, almost, a little over 15.5%, being a green candle, closing at the highs there. And then we did see a pullback. So I'm wondering if we are going to be seeing something similar over here. We did also close above the 200-day moving average, which is at $46.90 in the pre-market. We are trading below that. So yeah, are we going to start to see a pullback? And if we do, I just talked about this being a 90% move to the upside from current price, pulling back down, to, let's say just 30. I think that seems like a reasonable level to be buying the dip, or maybe at 31, 32 with the 21 and 50-day moving averages over there. That's a 30% move to the downside, 36 or so. So yeah, good to be, not chasing something like this. I do think it will be pulling back, but we could also be getting a pretty big move to the upside. And if it does continue higher, I've clearly am surprised that we've gone above 40, but if it does continue to the upside, I do have this red line marked here at 55. And let's see, why did I have that marked? We are looking at the daily. That is tough. Why? Yeah, maybe there was I'm not sure, a gap, or if I just thought 55 seemed like, a reasonable level. I am not really sure why I have that marked there, but it did approximately mark the top over here when we hit a high of, let's see, 54.60 on December 19th. And actually, maybe if I do switch this over to the hourly time frame, take, a step back in time, maybe that would give us an idea of why I have that red line marked there. And no, it just doesn't. It's not really that clear to me. I guess the low from November 1st was 55.30. Maybe because we have a little bit of a gap here in the after hours to pre-market from the 30th to the 31st, and that high during the after hours was 33.90. We gapped up, hit a low here in the pre-market of 54.20. Yeah, so I'm not really sure why 55 is marked there. So rather than being unsure of it and just going with it, what I should probably do is adjust that high to be the pivot high from over here. So from December 19th, that was at, let's see, 54.60. And so that seems a little bit more reasonable than just the arbitrary level of, let's see, $55. So 54.60 is what that level was, I believe, the high from December 19th. Yeah, so I mean, if this does continue to go higher, that is a level where I could see some potential resistance. So look for that if you're still going long the UVIX. But if not, yeah, I mean, I feel like at this point, 32, maybe I want to adjust this $26 alert to be below 32, because that is where I would potentially be interested to maybe start reaccumulating a position. And as you can see, that does look like it corresponds pretty nicely with the 21-day moving average at 32.08, whereas the 50-day moving average is at 31.60. But if I do switch over to the 10-minute time frame, we can just see, how this has been trading in the after hours as well as the pre-market. And it looks like, so yesterday, effectively, from the pre-market, there was a gap up. And then we traded just, floating higher throughout the day, got a little bit of a pullback towards the end of the day, but then continued to, go higher in the after hours trading session, hitting a high of 49.25 before gapping down into the pre-market. And I'm wondering if we will start to fade lower. So, and also I think another important level, I have this marked as an above alert. I should switch that over to below, and I should change that to 40, just being a round number, whole dollar number, and see if we do start to pull back to those levels. So yeah, I mean, I'm not going to draw it up here, but I feel like we are going to be seeing a pullback, so I think it's pretty risky to be going long on the volatility. But speaking of volatility, let's very quickly look over at the VIX, which is the Market Volatility Index. Very similar to the UVIX. This one is just options, so you can't trade it in the pre-market after hours, and you have to have expiration dates on what you trade. I just personally don't like that. But anyways, the VIX closed yesterday at a price of $27.86, being up over 19% on the day, but potentially maybe putting in a big wick to the top side. It's still closed in the upper half of the trading from yesterday, so doesn't necessarily look like a topping signal, but it does look like we were not able to close above that level that I have marked at 28.32, which was the high from December 18th, and that seems pretty similar to the level that I have here from December 19th. So we were kind of getting into topping mode on the 18th of December, but with the UVIX, it continued higher, whereas with the VIX, we saw a pullback there. So I might actually just make this line red so it does correspond with approximately match with what we're looking at with the UVIX. And so you can clearly see that this does have a wick to the top side much more than over here. And with this putting in higher highs here, we do see with the RSI that we are putting in lower highs. So potentially that suggests that this is bearish divergence, although price could continue higher along with the RSI, and then that would be negating any bearish divergence that we're seeing now. One thing that we can look over at with the UVIX to kind of compare is look at the volume. We have effectively, potentially a double top forming here in the VIX, but we don't have any volume data. We do have volume data with the UVIX. And so what we can see, we are putting in a lower high. The RSI is also a lower high, so no divergence there. It seems like, actually yesterday, pretty interesting. This does make me think we could be getting closer to a top. If we come back to this red line, horizontal line here, that is still above us. We had volume on that high day on the 19th of 8.94 million shares traded, whereas over here being lower, we had a volume of 5.08 million shares traded. And so while we are lower in the price, so that doesn't necessarily mean all too much relative to the highs over here. But if we do look at the volume from as we were going up, as we were breaking out from this downtrend, the volume was much higher, and that has faded lower. So that does make me think that we could be seeing a reversal in the UVIX and the VIX. And just to put it into context here, the volume from February 21st was 17.95 million, so much higher than over here when we were putting in that top. And that pushed us up, 13.75% on that day. And with the 22% volume or 21% volume that we saw yesterday, the percentage move, the volume is pretty low. So that does suggest some weakness there. And with us not being, that's uranium, the UVIX, I want to go to the VIX, getting all over the place. With us, being lower, closing lower than the high from here, that does make me think that we could start to see this pull back. And, I'm still going to leave that alert there at 20, but maybe we could start to see a pullback to around 24 if we are, in fact, seeing the top there. So pretty interesting there, but let's look over now at the SPY, which is the S&P 500 tracking ETF, which closed yesterday at a price of $560.58, being down a little over 2.5%, but then bouncing about $1 so far in the pre-market. And yeah, this does make me think that we could be seeing, a bottom being formed with this, I believe this would be like a capitulation candle, maybe. Maybe I have that wrong, still learning, the terms there. But we do have, a pretty big down move closing lower. So this would effectively be, as far as I understand, a confirmation close below the 200-day moving average, which is currently at $569.71. Because on, Friday, we did wick below that 200-day moving average, but we did not close below it. And actually, no, this would not be a confirming close, I believe, because this is the first close below that 200-day moving average. While we did wick below it on Friday, we closed above. So there was no breakdown. There was no close below that level, although we did get a close below Friday's low, so that doesn't suggest anything good there. But this is the first close below the 200-day moving average. And with this, we do have a pretty good wick to the downside, just like I was talking about a wick in the VIX to the upside. This could be suggesting that we might be seeing a reversal soon. The low from yesterday was $555.59. And with that coming down, we do have the volume increasing. So maybe that's not so good that this could continue, but we do, like I said, have that wick to the downside that could be suggesting that this volume corresponds with buyers stepping in. And let's actually switch over to the 10-minute time frame, not necessarily to look at the pre-market, but to look at, how we faded lower yesterday. But then we did start to get a bounce. And so let's see, let's just out of curiosity, the volume that we saw here was, let's see, 3.67 million shares traded in that 10-minute period. And that does look like, okay, let's see, over here, 3.31 million. This was 3.67. So yeah, that was the largest volume to really kind of suggest that after this big fade down, buyers started to step in. It's not a huge spike in volume, but it is the largest amount of volume for the 10-minute time frame for yesterday until, right around the close, we did see this big candle here, 11.82 shares traded. So that could be suggesting that, we are seeing some volume behind this bounce and that we could be seeing this go higher, that the bottom is potentially in. Although in the after hours trading session yesterday, we did start to fade back a little bit, but then we gapped up into the pre-market and are holding that level of, it looks like $561.22, currently trading above it, but right around that level. And so coming back to here, what I would really like to see for today is a close above 569.71, or effectively closing above 570. I'm not going to put an alert there. We'll just check back on it tomorrow. We'll have to see where it goes. But, I was suggesting, that kind of this green scenario was that we would see, a move lower. And effectively, that's kind of what I was thinking about with what we saw on Friday. And so we just saw a little bit of a continuation, a little bit lower than that green doodle that I have there. And so we'll see if we can bounce back up to reclaim the lows from the 13th of January, which is going to be at a price of around 575. So let's see if we can close today above 570 and then continue towards the end of the week. Getting a close at the end of the week above 575, I think that would be a really good look, but we will have to wait and see. And then real quick, just looking at the SPX, this is the S&P 500 index, closed yesterday at a price of $5,614.56, being down about 2.7% on the day. No pre-market or after hours trading with this one, but really like the exact same thing that we saw with the SPY, is that we saw a wick lower, but lower than that 200-day moving average, but close above on Friday. On Monday, we did gap down and then bled, but bounced a little bit, but then still closing below this level that I have marked here at $5,666.94. And I should note that the low from yesterday was $5,564.02. I'm getting better at, reading those big numbers as I do get more familiar with these pre-market preps. But yeah, I did want to, take a quick look back at the SPY because there is a volume with it. And, as we have been coming lower, volume is stepping up. So that does make me think that as this is fading lower, maybe buyers are starting to step in to be, pushing this back up, as we were seeing, the volume not being too elevated over here. And so maybe that change will be suggesting that we could be seeing a reversal soon. And so let's keep that in mind. I think that the bottom could be near. And then now let's switch over to Bitcoin. This is currently trading around $81,500. I feel like kind of similar to where it was yesterday when I was doing the pre-market prep. And so, I had talked about there being this CME gap, which is right around, let's say, between $86,000 to $87,000. I expect that to be filled, effectively by the end of trading tomorrow, and that has not yet happened. We actually saw a pullback to below 77,000, and around that time I had an additional order for a swing trade filled at 79,000. So now I'm risking $20 on the swing trade, which will, if it does end up failing, will just go into my long-term holding, so it's no big deal there. And I am basically expecting this to bounce. So my average is probably around 80,000 right now. I'm expecting that to bounce to fill the CME gap around 86. So let's see, from, right around, 80,000, wherever that would be. right around there, getting up to that CME gap. That's about an 8% move to the upside, but I will probably take profits at around 86,000. And so if I just adjust the numbers here, we can see, yeah, it's a 7.5% move to the upside. And so, not a huge trade, nothing to be going on about, but really that's just an experiment for me to see, within a few days, do we fill that CME gap? And that is something that I have learned from Crypto Rover. He puts out daily videos every morning, about 10 minutes long, 8 to 10 minutes. Very nice casual way to get an update on Bitcoin, Ethereum, and generally the crypto markets. But yeah, we did wick below this level that I have marked here at 78,700, just being approximate. And that is the 50% retracement that we have seen over here. And since we have, tested that multiple times, it does seem like it's a nice dip buying level around, let's say, 79. Thinking that, if it was to go to 77 or 78, those orders may not get filled, but we are putting in lower lows here, so that doesn't necessarily look that good as the low over here from February 28th, which is of course going to differ depending on the exchanges that you look at. But the low that we saw there was 78 and about 200, and over here the low is about 76 and around 700. And so we do have that 50% retracement there. And so what I might actually do is just omit the 382 because we have traded below it. We don't really need to be paying attention to that as a level of support. And we do have this CME gap here, the downtrend that will be, potentially acting as resistance. And if we start to go higher, I can always add that back in. But so for me, what I am looking for with Bitcoin is if it is still below 86,000 by, this evening, I'll probably add another $10 to that little swing to see, that experiment getting back to the CME gap. But I'm expecting us to start to see a rally and maybe get up to there. Then I would take profits just for that swing trade small position that's $20 currently, continuing to do the daily $5 DCA. I would get more aggressive with those DCAs or limit buys if it comes down to 75,000 and or 72,000, and that is really based on the prior all-time highs over here being around 74,000, the tops over here. Just thinking that maybe we don't get down to 74,000, so I'd have a limit buy at 75. If we do continue lower, we've got that 618 marked there at just below 72,000, so I'd like to add another $10 there. But if that order does get filled, then I'm going to start to get a little bit more aggressive. And I don't necessarily think price is going to come down to 69,420. Just having fun with that number. But if we come down to 72, then it's like, well, this I think is, long-term dip buying opportunity. Long-term, again, not for a swing trade, nothing like that. I would place a more aggressive buy either, at 70,000, 69,420, or I just do a market buy just to get it over with. And then if it does continue lower, then I kind of reevaluate for more aggressive dip buys, generally just doing $5 daily DCAs. Nothing too exciting with that. But yeah, with this, I expect that by the time I do the next pre-market prep, we will have this candle going back up to, actually, maybe I just want to do it like a straight line. And so what I might do is I'll do a trend line. And so let's see from where we're at here, and just going one day over, if we do something like that. And so I'm going to say, I think that's going to be a green candle. And let's see, can I add an arrowhead to this? I can. So that is, and maybe I just, want to do it yellow so it stands out from, what we're looking at there. Or maybe, I don't know why I'm changing all the colors, going kind of crazy with this. I can just leave it as being white. We'll see tomorrow. Do we fill that CME gap that we have created? That is what I am expecting, but that doesn't necessarily have to happen. But anyways, now let's switch over to URA, which is the Global X Uranium ETF, ticker symbol URA, which closed yesterday at a price of $23.11, being down about 3.5%. Currently trading around $23 $23.05 in the pre-market. And so this did go lower than 24.50 that I was talking about over here. And maybe what we can do is clean up some of those levels. And actually, yeah, I mean, just because I had drawn all this stuff here, I made it very clear about this purple thing. I was a little bit impatient with this downfall, but I was spot on with it. I don't need, well, maybe actually I'll leave that up there just as legacy because, to hold myself accountable. I'm going to delete this white arrow. I am going to delete this trend line. And I think I can start to remove some of these levels. So the 618 there, I'm just going to get rid of that because I don't think we necessarily need it. I'll leave the 786, which is at 24.50, because that was kind of my thesis with that downside move. I don't think I need this 100% extension there, but maybe I can add some other levels just for fun, like the 1618. That would be around 22.14. And actually, since I said just for fun, maybe I'll leave that. That is, a downside level that we could potentially be coming to, but I am going to remove that 100% extension because we have clearly broken below it. And so, yeah, 22.14, if we do go lower, that could be it. But, I think that it might be time now for me to maybe delete this uptrend or maybe just make it thinner so it doesn't stand out too much. Or no, I'm just going to delete it. Because I did revise that to be this green uptrend, which is based on the low from August 5th when markets gapped down. And then basically a month later on September 6th, markets were also fairly panicked, but not as much as over here. Those two pivot points, those two pivot lows make that trend line. And so far over here, that has served as, a very nice dip level right around 23. We've had 2 wicks below that level, getting a low on March 4th of 22.91, but closing on the day at 24.05. And then over here from yesterday, if I can get the cursor lined up there, on March 10th, we hit a low of 22.78, but closed above 23 at 23.11, as you see up here. So that does seem like it was a good dip buying level. That does seem like it's held as support. And if we do look over here, we do have a lower low here. And then with the RSI, we have a higher low. So that is bullish divergence. That does suggest we could be seeing a reversal. And let's see over here. We do have, effectively higher volume over here versus over here, but really, effectively it is flat. So nothing too crazy over there. But yeah, I mean, this potential bullish divergence, maybe that is a signal that this could be a bottom. And with that being said, we do have higher lows over here. Let's see, let's just make sure, yeah, that is higher low, respecting that trend line. And with that, we do have higher lows in the RSI. So there's no divergence there, so nothing to be going too crazy about. But yeah, I think that uranium generally is, going to be good long-term, nuclear, so pretty excited about that. But yeah, I do see Kevin B has TNXP, so I'll just add it here as the request, but I am just going to get into Chewy and natural gas, since I did have those in the thumbnail, but I might actually take a little sip of coffee before I get into those. And so let's see, getting over to Chewy. So with this one, I had the alert placed here at $32. Not exactly sure why I had the alert there, but I did not want to be buying the top. So that's why I placed an alert there to see, where this could be coming back to. And that probably corresponded with the highs from over here. It looks like the highs from September, and then also pulling back to a little bit of a dip here around 32 in the middle of November, testing that prior resistance as support over here, kind of getting a fake out breakdown below it. And really, testing that 50-day moving average before continuing higher. And so with this, I would have to say There are a few things that stand out to me as, I am not ready to buy this. And even if I was ready to buy this, I'm trying to be a little bit more better at managing risk. So I would probably still wait for this to come further to the downside. And with that being said, I should note that Chewy closed yesterday at a price of $31.83, being down about 4.5% and effectively being flat in the pre-market. And so, yeah, looking at this, you can probably tell, there's this uptrend. I might actually make this green to kind of signal that is potentially a dip buying level. That does go back to the low from April 25th, as well as the pivot low from August 5th when markets gap down. That's a very important, very special day. And so based on that trend line that has acted as support over here, we have not yet tested that, and so I could see the price coming down a little bit lower, maybe coming down, in all honesty, to around $30 a share. I've already got that marked there, so I might just delete that $32 alert that I have there. Actually, well, yeah, and I'm just going to be disciplined with this. I think that $30 could be tested. There are a number of reasons for that. One is that green uptrend. We could always wick below it, close above it. That would be fine. Even if we wicked and closed below it, that could be a fake out breakdown to shake out weak hands. And so with that, I could see price coming down to around 30. We also have this blue line here, which is the 200-day moving average. That is currently at 29.86. So there's kind of a confluence of levels there also, with that being a whole dollar round number being divisible by 10. I think that could be a dip buying level for a lot of people. And then it probably stands out, this horizontal white line at 29.92. That is the 50% retracement from this retracement that I have here, going from the low of August 5th, that was at 1975, to the high that we saw over here on January 30th, which was at $40.09. So there's that 50% retracement there. And so I would view this as, coming back to this uptrend. It still needs to go lower. Maybe that's at 31, but I think it could go lower than that. I think it could break lower. I think it could find the 200-day moving average as support at around 30. And also this 50% retracement seems very reasonable to me. And if we look at that level over here, that does look like it was kind of, it's a little bit ugly, but maybe there's this like head and shoulders pattern here with both of those shoulders finding that level as resistance with a little bit of a fake out breakout up here serving as the head. That seems like it could be a level that we would be revisiting, could definitely be revisiting, but we could also be heading lower than that. And so that is why I personally would want to be disciplined and wait for $30 a share. And the reason why I think we could be heading lower is two reasons. One is on here, one is not, but that's the 618, that's at 27.52. We do have, levels over here that acted as some resistance. It looks like in August, the middle of August, got rejected from there before pulling back to that 50-day moving average and then going up higher. So that could be acting as support if we do break below 30. Also extending that over here, some more resistance here. And if we do take a step back, really just coming to over there. And actually, taking a step back, I do see this level over here around 25. That was some pretty notable resistance. And so if I add over here the 786, let's see where that level is at. I suspect it will correspond with my cursor. There we go. It's back. Yeah, the 786 around 2410 corresponds pretty nicely with the top over here. So that's another level that we could be heading down towards. But the one that I do not have drawn up here, we see a little bit of a gap. I'm just going to remove my drawings here for a second. You can see that gap very clearly over here. And so while one might think that we have a gap based on the high from November 1st to up there, gaps are actually based on the closes to the following days, either lows or highs, depending on what you're looking at, the direction it's going. And so the close from November 1st was at a price of $27.12. And so I am going to draw that level over here, $27.12, make that a dashed line because it's an unfilled gap, and I like to make my gaps blue. So I think with Chewy, if you want to go long on it, if you are long on it and are waiting to buy the dip to get the average down, however you want to think about it, I think that 30 is going to be the level to be patient for. I think that will be getting tested, but I of course could be wrong. But I'm not going to place an alert at 31. I'm going to be patient because I want to see it pierce this uptrending level, and also because of that 200-day moving average, the 50% retracement, and really, I feel like the 618, that's the most compelling level. 30, that could be a nice level to get a starter position, maybe a quarter of a position, but then coming down to the 618, filling that gap, that could be a nice level to, get another quarter of a position, so to accumulate to a half a position, to be then ready for, or maybe then get a half a position, so you got 3/4 of a position, but then be ready for 24, 20, 10, 25, whatever, somewhere around there, to then go more heavy. And so with earnings coming up, it looks like on the 26th, I think that we could continue to see a sell-off getting into the 20s before earnings, and then maybe around then, that would be when we see a bounce. So pretty cool there. And so I'm just going to throw this up because I think I'm going to make this into a video. But, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching. All right, so I've got that little clip there. I am just now going to flip over to KOLD. This is ticker symbol KOLD, which is the ProShares Ultra Short Natural Gas. So it's 2x leverage, short natural gas. Natural gas is the widow maker, so very good to be cautious with this. I had made a video a few weeks, maybe a month ago, talking about 27, 26 being a potential dip buying opportunity for this to be rallying higher. That very clearly did not happen. And so I was wrong about that. But we did pull down to this downtrend that I have marked here. It looks like it's kind of an approximate downtrending level. I might revise that to, let's see. Yeah, I just have, a little trend line there. I might revise that to be a ray. So we got 2 pivot points, just being a little bit more precise with it. And so that was based on, let's see, the low from over there. Yeah, okay. So let's see. And then I will take this ray and draw it from the low from October 2nd and connect it to the low from January 16th. And so now we have that nice little downtrend. We did get one close below it on February 19th, but that does look like it was a dip buying opportunity for a nice little 20% rally there. We did test it again on March 4th, and from there, it looks like from that line, so not the low, it looks like we got, an 8%, rally there. And then now we're seeing a pullback, hit a low yesterday of $16.20. And so and actually during the pre-market, I actually bought the dip a little bit, not super aggressive, but during the pre-market a couple days ago, did go sub 16. So I had a little order placed at 16 because I think I saw in the overnight trading, which is not on the chart here, I saw that KOLD was below 17 into the 16s. I think it was in the sub 16s in the overnight trading. So I had a limit buy placed at 17 that wasn't filled because it wasn't for after hours, it wasn't for overnight trading. And so I was like, well, I'm just going to adjust that to 16, and it did get filled in the pre-market. And we have gone higher since then. So maybe the bottom is in here with this. And with that gap that we have to the upside, let's see what kind of percentage moves we have from right around current price. that is over 100%. Getting up to that 50-day moving average is about 85%. But let's say that moving average continues to come down. That's potentially like a 50% move to the upside, so looking pretty nice there. Or if we just go to that 21-day moving average from current price, let's say, that's at least a 20% move to the upside, so looking pretty good there. But what I wanted to talk about with KOLD or with natural gas is actually not this chart, because this is an ETF that tracks the natural gas commodities price. And this is a leveraged inverse ETF. So kind of, risky or not so great to be doing technical analysis on this one. So what we want to be doing is flipping over to looking at the commodity here in TradingView. And so this is something that Gareth Soloway talked about in his in his game plan pre-market videos that he does. He's going to be streaming in a couple of minutes. Then he also followed up with the trading the close yesterday. And so what he was talking about was putting in a topping signal here with a big wick to the upside, closing in the bottom quarter of the trading from yesterday, March 10th. So it looks like we got that. It does look like we're bouncing a little bit. So maybe there's, still a dip buying opportunity with KOLD. But really the takeaway from this is the high from yesterday was at a price of $4.92. And so we would need to be getting a close above that to suggest that this could be continuing higher, that is not, in fact, a topping signal. And it just looks like that's a pretty clear inverse hammer at the top here. Big wick closing in the bottom quarter, really at the lows from yesterday. So what we're seeing now with this green price action, trading around 460 over here, I think that's probably going to get negated and that we could be pulling back. And one thing that stood out to me that I found to be super cool, I saw this in Gareth's game plan yesterday, or actually it might have been from his Trading the Close video, was a trend line that he had that connected with the high from yesterday. And so I'm actually going to do this in kind of a funny way. I'm going to connect the first point to the high, and then I'm going to draw that going back in time. Are there any levels that we could draw that might suggest, that that's a top? And so this, I wouldn't think that's, significant, anything like that, because it's just kind of, wonky over here. But thing that stands out is over here, we got this top from, let's see, March 3rd of 2023, just being kind of approximate there. We got this double top here, intersects perfectly with that before a pretty big drawdown. And so that intersects with the highs from yesterday. So that to me seems like it's a pretty notable coincidence that was the high. And we could be seeing a reversal. And so that means that we could be seeing a pretty big rally with KOLD over here. But if we are seeing green candle so far on the day, maybe there's still a dip buying opportunity with KOLD. It looks like in the pre-market it's at 1643. So maybe we see another test of 16, and actually during market hours the low is 1620. Maybe, that's a nice dip buying level before we really start to see this rally. So I personally am kind of intrigued by that. I do have a small KOLD position, but I've been passively adding. I might more aggressively add as we see a bit of a rally if we are starting to see this top be formed over here. So pretty cool. Just wanted to share that with you guys. And with that being said, I might also make this one a video. So, with that being said, make sure you like actually, I'm going to do that over. And so with that being said, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching. And then I will go over real quick at the end, go over TNXP, ticker symbol TNXP, which is Tonix Pharmaceuticals, which is up 13.47%, or which is closed yesterday at a price of $13.47, being up 3.5% on the day. And so, I think that this is not a market to be gambling in, and this right now, having been up from the open on the 4th, this is currently up 80%, was up 150%. GTFO, take profits. Don't enter this. The 21-day moving average is at 1045. So maybe look for that to be holding as support. But that is 20% move to the downside. So yeah, I mean, I'm just going to be, whenever I get stocks like this, requests, I think it's time to be managing risk, not to be gambling. And so, yeah, I don't know anything about this stock. I don't know anything about this company. But with the markets bleeding, it is encouraging to see that this has been rallying, but it might be short-lived. The market cap here, 75 million. It's not super huge. There is this gap to the upside. And yeah, I mean, maybe this is, let's see, doing something like this. I don't think so. Yeah, I mean, I think that they just had a reverse split, 1 for 100. They had a reverse split over here, 1 for 32, June of last year. And they had a reverse split over here. And so I think kind of, let's see, what was that reverse split? That was 4 for 25, WTF. And so I think, kind of a rule of thumb that I learned from somebody in the chat is that if you go back 2 years and the stock price is above $1,000, they're diluting into oblivion, and it's one to avoid. And so if we go back from current day 2 years, let's see, price, actually, let's just do it based on the date. So let's see, we are at March 11th, so let's go back to March 11th, 2023. What was price then? March 13th. So let's not push it to the 10th. Let's go the 13th. Price was, 12,000. So yeah, I mean, I think that this is just incredibly speculative, incredibly risky. If you're up on it, take profits and look for a different trade. It was a successful one. If you're looking for this to rally, to squeeze, I think you're going to lose money. I think you're gambling. So I'm just going to leave it at that. Good to manage risk, especially in this volatile market. And with that being said, thank you so much for hanging out, getting ready for the markets with pre-market prep. Make sure you like and subscribe, and I'll be doing this again tomorrow, probably starting at 8:15, as it does seem to be a struggle for me to get started at 8. Thank you so much for watching. Hopefully you have a great day trading, and